see.
All right, we are going live. Meeting is now streaming on Facebook. Hey, everybody on Facebook. Thank you, everybody, for joining us. We got 28 people here today. We're going to have them stroll through. A couple people will come in. A few people will come in a little late, but let's start with intros. Savannah, you want to start off with intros?
Yeah, sure. Hey, everyone. I'm Savannah. I am a registered nurse in Los Angeles, California. I started investing in real estate at the beginning of 2020 after I had my second daughter. And then in less than 2 years after that, I was able to quit my full-time nurse manager job. And now I just work per diem at a hospital here in LA. I invest primarily in multifamily syndication. So it's people pooling together their money and their resources and going out and buying apartment complexes. So we own and operate 4 of those. And then it's provided me a lot of cool opportunities to have passive investors in our deal. So I have a lot of healthcare professionals who want to jump into real estate but not do any work, and they can passively invest in our deals, which has been really, really cool to get a lot of nurses and doctors and other healthcare professionals started investing in real estate. And Alex and I share the common ground of healthcare professionals, and we're both super passionate about real estate and just wanted to kind of create a hangout spot for people to come and learn about different strategies in real estate and how to build growth and kind of create a little bit of a community.
Yeah, community has been pretty cool. We've had it almost 6 months now. I think we got 2,200 members. Is pretty active too. But hey, everyone, my name is Alex Sabio. I invest in short-term rentals. I've been doing that for about 1.5 years now, not that long, but I've been investing in real estate for quite some time in the long-term rental space, and I've made every mistake out there, you know, and it wasn't until I got into short-term rentals that thing had an amazing time doing it, was highly profitable, and now I love just helping others and teach them how to invest into short-term rentals. And I'm an open book. I tell everyone all of my mistakes, how I had a foreclosure, how I had a bankruptcy, I was scammed out of something. But short-term rental has been amazing for me because it was cash flow on steroids. And at the end of the day, that's what's going to help you win the day, having tons of cash flow, which is why I'm extremely excited to have our guest on today. I've been following her some time on social media, Diya Liu. I mean, I'm a huge Diya fan. Like, if you guys follow her on Facebook or Instagram, like the work she does is absolutely phenomenal, and she has scaled so fast, and it's been extremely impressive. So Diya, why don't you introduce yourself to everyone and tell them what you do and what you're working on now?
Of course, yeah. So I do have some slides, but just really quickly before I go into slides, this is a face. My name's Diya. I am a short-term rental investor as well as hotel investor. So I will tell you today my story, how I went from zero real estate experience all the way to house hacking and then renting out my house on Airbnb and making enough money to save up for more short-term rentals. And then I went to short-term rentals investing. Now I have short-term rentals in 3 different states. And then I decided, you know what, I want to play bigger. So I decided to play bigger and told everyone I was going to invest in hotels. No one believed me. A guy I was dating at the time said I must think I made a money. And I was like, oh, that's not the right guy for me, right? So about a year later, after he said that, I bought my first hotel. So it took a lot of offers, a lot of trips around the country, a lot of stressful tears. I'm sure a lot of you guys can connect with that. A lot of naysayers, both when I first entered into the short-term rental industry, as well as when I first started venturing into hotel investing. So I think that you guys will connect with a lot of the aspects of my story. So I'm gonna share my screen. And by the way, Alex said that you guys are you guys get a lot of STR content. So the first part of my deck is relatively STR heavy. So I'm going to kind of skip around a little bit in the first half of my presentation, just because maybe some of the information might already be really familiar with to you guys. If you guys have questions, just post it in the chat and I can further explain, but I'm going to try to jump around a lot on the STR part of my slides. And then I'm going to go into what a lot of you guys are probably here today for, which is how I went from STRs into hotel investing. So let's see. Wait. Let's see. Wait, I'm trying to share my screen. All right.
Okay, we could see it.
Okay, and by the way, Alex, if you want to call out questions as they come up, just pause me because I don't see the screen after
Sure.
I the slideshow mode.
No
Okay.
problem.
Okay, so this is a picture of the ugly hotel that we bought on the right, but I'll talk more about that near the end of the presentation.
Love the hot tub.
Yeah, we're still thinking about ideas on what to do with this particular hot tub because people love it and hate it at the same time. So I'll have to crowdsource at the end what we should do with this hot tub. I'm thinking about an Instagram spot for the hot tub. We'll see. So a little bit about me. Actually, I double majored in chemical engineering and biochemistry. So I do have a bio background like many of you guys. I graduated from UT Austin. I decided that the research life was not for me. I smell like E. coli a lot more than I care to want to actually, and decided lab coats, that's not my forte. Let's just put it that way. But anyway, I went to law school with a full ride scholarship and practiced patent litigation where I advise life science companies as well as Fortune 500 type companies on their intellectual property issues. And then I started in STR investing. I teach STR investing nationwide now, and I own about 41,000 member Airbnb group that's called Airbnb Professional Hosts. And most recently, I do hotel investing. Okay, so this is actually just really quickly. This is how I started. So very humble beginnings. That's a Mazda that we were super proud of. We took 200 photos in front of it when we first came to the US, and because just having a car meant success to us. So we kind of bragged to everyone that we kind of made it by posing in front of this car. But anyway, so let me skip around a little bit. So this is just some of the places I've spoken at, including the National Real Estate Investing Summit on STR. I'm gonna skip this slide, but this is just why I personally like STRs. You guys already know a lot of this. One, cash flow, being able to travel to beautiful destinations as, for business, amazing location independence, not having to chase down late payments, not having to evict tenants, able to use secondary home financing, and ability to combine with other strategies such as BRRRR strategy or flipping, or there's so many other strategies that you can combine with short-term rentals to maximize your return on your investments. So let me see. I'm gonna go. So first, I want to go to my very first STR, my second STR, which my first and my second STR were this little tiny 1-bedroom, 1-bath beach condo that was beachfront. I put 25% down, and this is back in the day where you're able to pick up a beach condo that's walking distance to the beach for $115K. I don't think those days are available anymore. So I feel like I'm old when I say this, but this is actually only just a couple of years ago, guys. So the real estate market has definitely gone up a lot. And then I bought this ski condo for, get this, guys, it was $95K, so, and 10% down. So, and it was walking distance to the ski list. This was a really lesser known ski destination. But once again, these prices are probably not something you can get nowadays. And so this is further to drive home the point that I thought STRs was crazy and did not make sense at all, because my monthly mortgage interest, tax, and insurance payment was a little bit over $600 a month. And my down payment was about $12,000 on this property. And one of my very first payouts was over $2,000 for a 5-night stay. So one booking was about 1/6 of my down payment. This is why I was like, okay, I'm officially addicted to STR investing. So I'm gonna skip some of this. And another reason why I really like STRs was because of my engineering background. I really like fine-tuning the Airbnb algorithms and being such a nerd with playing around with conversion rates and how many people were looking at my property listing, etc. So a while back, Airbnb did have these dashboards where you're able to gauge where you are relative to your competitors. So one of the things I was really good at was beating my competitors in terms of how many times my visitors ended up booking with me, one, and two, how many visitors visited my Airbnb listing to begin with. So you can see that the results are that even though my average nightly rate was about the same as the market median, basically 138, versus the market median 137, I was able to get 95% occupancy rate versus the market average of 52. So that obviously also meant that I got a lot more revenue than my competitors. And you can see the reason I was able to get this amount of STR revenue relative to my competitors was because my search impressions, which is basically how many times I landed on the first page of Airbnb search results, was much, much higher than my competitors. So once again, that's 1728 versus the market median 573.
Dia, how do you get that information? I mean, for some of the newbies, where did you source that information?
So these screenshots were taken circa 2020, I think. So I'm not sure if you can get exactly this chart to pop up anymore, but this is something that you can see on Airbnb dashboard under performance. Another way to gauge where you are relative to your competitors, you can be on your dynamic pricing tools such as Price Labs, which will show you where you are relative to your competitors, but it's not really like the conversion rate or the average first page impressions. It's really other KPIs or key performance indicators, such as what your RevPAR is, which is basically a metric that multiplies your occupancy rate by your average daily rate. So basically the most important metric that you'll hear about in the hotel as well as the STR industry. And you can see those kind of metrics on Price Labs. You can see sometimes, I think if you pay for the AirDNA reports, you also get different types of data where you stand relative to where your competitors stand. But this particular screen that you guys are looking at right now, I don't think that that's something that you can get to anymore on your Airbnb dashboard. This was something that I checked compulsively though, back when it was available to me. So, the reason that I was able to get a lot of these conversions as well as eyeballs on my listing was twofold. One was because of design, which I'm going to show you a couple examples really quickly. But also the second thing is copywriting and basic principles for hacking the Airbnb and VRBO algorithms, which, you know, there's so much to talk about on that topic. So I'm just going to focus on the design aspect today. But you can see that in the before picture here, this was actually already a STR. It was, I guess, nice-ish already. It's, this is something that will generate revenue, but it's not something that particularly makes people want to stay there over other properties. And so what I end up teaching a lot of my students is that you do want to create a really unique experience that draws eyeballs towards people, towards your listing, not towards people, towards your listing. So people want to book with you. So this is actually one of the properties that I wholesale to one of my mentees, and then I help them set it up from the before to the after photo. They are both very busy. The one person is an optometrist, another is very high up in the tech industry. So they basically trusted me to do all the design for this because they were like two guys and they were just like, Diya, just go for it. Make it nice. And so I just made it nice. And so you can see what the after looks like.
I was going to ask, like, who designed it? Like, did you hire an interior designer, or that's all you, right?
Yeah, I love design. So I do have a little bit of a background in design and arts. Really, I've taught art before, randomly while I was in college. I also I was a fashion stylist while I was in college too. That's a different story that I'm not going to go into right now, but long story short, I love design. So this is a very enjoyable process for me to transform ugly into beautiful. And you can see here, this is a $95,000 condo that I converted into the after photos. So I stenciled a lot of what you see on the walls here, including the wall mural that is basically the mountain ranges, as well as this southwestern design that's on the left-hand side, bottom left-hand side. And then also what looks like wallpaper, but it's actually also stenciling, is basically behind the open shelving in the kitchen. So I just had leftover paint. So I wouldn't recommend this, but by the way, speaking of scaling, I do not recommend self-painting DIY projects like this, but I really enjoy art. So this is something I did just because I wanted to. This is another project that in downtown Austin that I did. I'm just going to scroll through some of these really quickly. This is one of the recent projects I did. That's a beach destination. I really, really like how this shower turned out. This is one of my mountain town destination vacation rentals. I really like to decorate based on what the local aesthetics and what the local vibes are. So this is still the same unit that's in the mountains in New Mexico. So there's a lot of New Mexican influences in this particular property. And this is something that I stenciled. You can see the whole time-lapse video on Facebook if you follow me on Facebook. But basically I painted 2 Instagrammable murals in my Scottsdale, Arizona condo. And this is one of them. And then the other one is this one that's giant. It's floor to ceiling. And my thought was there's going to be a lot of people that try to take something for the gram in front of this particular mural. So, and my assumptions were correct. So as soon as I listed this on Airbnb, I got 5 bookings within 24 hours for that month. So definitely, I think that having these murals helped a lot. So I'm just going to skip through these. Okay. So anyway, skipping on to multifamilies and hotels, because that's what a lot of you guys are here for. So what I did was around 2021, early 2021, or actually late 2020, I was thinking about, hey, it's actually, there's a ceiling to how this whole buy short-term rental cash flow, use the cash flow to buy another short-term rental down the road. One, because, I have to spend the same amount of time and energy every time I set up a single short-term rental. What if I could have the same amount of energy and time and then immediately get cash flow from, let's say, 100 units instead. And so hypothetically, that sounds amazing, right? Of course, I want to do, the same amount of work and then cash flow 100 times more. And the other reason I really wanted to try short-term rental multifamilies and hotels is because when I sell my turnkey short-term rentals, I am able to get a lot of interest and offers above the MOS price, but I'm still subject to appraisals and residential appraisals, which is independent of how much money I'm making. So it doesn't matter if I'm making twice as much income as my neighbor is, which oftentimes is the case. I'm still going to have the same appraisal report as my neighbor, right? So I was able to bypass this particular hiccup, when I'm trying to sell my STRs as turnkey STRs and therefore trying to command a premium for it by basically asking for cash offers or asking, maybe structuring an owner financing deal. But I was thinking, hey, if I move to commercial real estate, which is basically where the valuation is based on how much income I'm going to generate, if I raise the income, I'm basically raising the valuation of the building. And that is the aha moment where I decided, you know what? I am going to go into STR multifamilies and hotels. And at the time, I looked all around on the internet and I didn't really see that many people doing STR multifamilies at all. There's some talk about hotels and motels and et cetera, but there wasn't anything that I could find in terms of how to do STR multifamilies. And that was like another moment where I was like, you know what? Multifamilies are becoming this overheated asset that everyone's trying to bid on to the point where it no longer even makes sense from a cash flow perspective. There's deals on the market where if you just use long-term rental income, it doesn't really make sense to buy this property. But what if I go in with a team of my STR folks and we convert at least 50% of these units into short-term rentals or monthly rentals? Then all of a sudden, a multifamily asset that may not make sense from a spreadsheet perspective as a long-term rental now makes sense. And that is when I decided, you know what, I'm just going to sell as many short-term rentals as I can, and I'm going to get into hotels and STR multifamily. So this is actually a photo of me standing in front of one of our very first projects that we got under contract. It was 13 units. We were able to negotiate owner financing, and we actually had the longest due diligence period. And we decided not to buy that one because by the time due diligence period expired, we actually had under contract so many other projects that were much more attractive from a cash flow perspective. So we ended up closing on the other properties, which I'll talk more about later. But this is basically a very, let me see.
Where was that project, Diya?
This project was also in the coastal Bend region, which is basically in Texas. It's by the beach. But we decided not to buy this particular project because this particular area was not as touristy as where we're basically going to get our beach motel, which we're closing on. Hopefully, we're supposed to close today, but we got all the closing documents for review. So hopefully tomorrow or Wednesday, we're going to close on the beach motel, which I'll tell you guys more about later. And so 2021 and through 2022 was a very hectic and emotional year. There were so many mistakes, or not even mistakes, just hashtag unlucky, I would guess. So to give you an example of two of these projects, one was, actually, I should probably only disclose one of them since we're alive. Okay, so I'm going to talk about one of them. So one of them was this 17 unit multifamily that I had. Yeah, so one of them was this multifamily by the beach that I had under contract. And basically, I was able to buy it by myself with 1031 exchange money that I had from the sale of my STRs. The problem was a couple of days before closing, I realized that the flood insurance was going to be about $40K just for flood, not for liability, not for wind. That's all extra. It's just for the flood insurance. And also it was in what's called a special, what was it? It was severe repetitive loss area, which basically there's only 9,000 properties in the USA that is designated as such. And so I was that unlucky buyer of one of those 9,000 properties. FEMA doesn't even know what to do with these types of properties. And so basically I decided, you know what, I'm going to exit. This is one of my first larger commercial projects. It's very risky. And lo and behold, 2 months after I exited that contract, days before closing, losing $17,000, that particular property flooded. So that was probably the best decision I ever made and best $17,000 that I ever lost. But that's one of the lessons that I had to learn painfully. So, but anyway, so 2021 through 2022 was a lot of these sort of similar experiences. We were under contract for, I did over 50 trips. I made over 12 offers on hotels. I think I made more offers than that on multifamilies as well that fit into the short-term rental multifamily model. We were able to close on one hotel and one multifamily after about 365 days, basically. So a lot of failures, but some successes as well. And so you can see that here on the left-hand side, this is actually the tub in our Ozarks Hotel, which is 48 rooms. It's in very good condition from a structural perspective, but is very, very, very ugly. As you can see, it has red shag carpet. It has mirrors everywhere. It has these heart-shaped tubs in 16 of the rooms. It has those floral quilted quilts that you put on the bed that looks like something that you might see on at your grandma's house. It is very dated, but it was structurally very sound, and we were able to get it for $725, which is really, really cheap. That's probably how much that some of you guys are spending on single family STRs. And that's how much we're able to get our first hotel for.
Hey, Diya, I have a couple questions rolling in. I've been so transfixed on your presentation that I just noticed them. Do you want me to stop you and ask you now live?
Yeah, for sure.
So what features or location make a good hotel possibility independent of price, repair costs, and cash flow?
Really complex question, but I will try to answer it very quickly. So we honestly answer, so look at how many trips I've taken in 2021 alone. So I don't really nix locations just based on the location. It's really deal specific. So I see in the STR space, a lot of newcomers, they think that, hey, I've heard a lot about the Smokies, or hey, I've heard a lot about this market and that market. That means everything that I buy in this market, it's going to make sense. And same thing with hotels. Like for me, I don't really have a particular location that I'm always going to say yes to. And I don't have a location that I'm always going to say no to. But with that being said, I normally look at the source of tourism the most. So what are the sources of tourism? How many sources of tourism? How diverse are the sources of tourism, or why people travel to that place? Are they traveling there for work and for pleasure? What are the average demographic, and is that something that I want to cater to, right? So is it someone that I can personally connect with? I tend to like places where it's either beach properties or in mountain towns, just because I personally like those types of towns. And it's really easy for me to design for the people who are visiting those towns in terms of design aesthetics. It's also really easy for me to connect with people who are outdoor enthusiast because I love the outdoors. I love hiking. I love going to Colorado. I love going to Montana. And so that's really a target demographic that I can really connect with. But of course, cash flow is very important. And we typically get our deals off market. So that's why we're able to get such a good price on the properties. So our 7750 hotel, we are the hotel right next door, actually listed on the MLS recently for $1.5 million for 30 rooms. And we got ours at $750K for 48 rooms. And it's about, their hotel is slightly more updated, but not by much. So we really got a good deal on our particular hotel. And that's why we said yes to that one out of all the deals that we're analyzing, hundreds of deals that we analyze in 2021. Other questions?
Oh yeah. How does financing differ from residential short-term rentals? Do lenders require that you have experience?
Oh yeah. So we did, so yes and no. So it's different in that there is we did run into a lot of lenders asking us, hey, what hotel operational experience do you have, etc. Well, and we bought a multifamily that was 10 units in San Antonio, Texas. And we're basically doing a slew of monthly rentals as well as short-term rentals with those properties. When we did that, because lenders saw that pretty much all of me and my business partner, we all had a lot of single family and duplex experience. There were, it was only 10 units. So, and they're short-term rentals. So they really didn't put a lot of scrutiny into that. But it also helped that I already closed 5 other loans with them that were residential. So that helps a lot. In terms of hotels, I would say that we had a lot more issues qualifying for loans traditionally. And it might also be because that the financials on this particular hotel was also not very strong, which we later use in our negotiations to our advantage. But long story short, we had a lot of issues getting a hotel lender to look at this deal. And so in the end, I went back to the seller and I negotiated seller financing for 3 years at 6% interest. And so that was one of my easy workaround solutions for my first hotel deal. Because a lot of times when people are scaling to larger commercial deals, it's kind of a chicken and egg problem where it's like, you need experience to get your first multifamily or hotel, but then, how you're going to get experience if you can't qualify for a loan. So 2 ways to get around that. One is to negotiate for a non-traditional source of financing, whether it's building a relationship with a private lender, whether it's negotiating owner financing, whether it's to take over the existing loan but once again, sometimes that requires bank approval as well, or just partner with someone who already has operational experience. So.
Yeah, Diya, what kind of bank did you go through that? Was that a credit union or someone, you said you already had a relationship with them?
So for the multifamily, it's a hard money loan, but we were actually able to get very, very low interest rates for a hard money loan because I've already closed 5 different loans with that. So I'm allowed to advertise that rate publicly, but then with the hotel, I negotiated owner financing at 6% interest. The first 18 months, it's interest only, and it's a 3-year note, basically. So
yeah, that's a crazy thing about real estate, you guys. If a lot of you guys coming in here and haven't structured financing on deals, there's so many different ways you can do it, especially when you're doing owner financing, seller financing, and hard money loans. Like you can create so many different formulas and kind of terms based on what you're wanting to do with the property, which is a really, really cool thing. And then someone asked, how do you self-manage and go on vacation?
So I first started SDR operations by going a self-managing route. And I taught people how to do that. And it's, for me, I automate as much of my process as possible, check-in, check-outs, automated messages, automated pricing adjustments, et cetera, et cetera, et cetera. But at around 8 or 9 short-term rentals, I realized that guest communications was not the best use of my time. So at this point, all of my short-term rentals I have outsourced to co-hosts and local short-term rental management companies, and they're all really, really great in their respective markets. Well, like I mentioned, I have STRs that I own by myself outside of my commercial deals in 3 different states, and I can't do it without my amazing co-hosts and local management companies, as well as my assistant.
I was going to ask, like a lot of us do have short-term rentals already, single family homes, and we're used to managing those, whether it's just something small, but what is it like having like a larger deal like that? I mean, is it the same, pretty much the same exact setup? And I mean, what can we expect?
You mean for management or for?
Right.
Okay.
Like, let's say that the 10 unit over in San Antonio, right? I mean, is that just 10 times more headache? Or, I mean, you're a big systems person, so I'm assuming you have a pretty cool system there in place already.
Yeah, so we have for the San Antonio, because it's a mix of monthly rentals and short-term rentals. Monthly rentals don't have a lot of, don't require a lot of touch points in terms of guest communications compared to short-term rentals. And so we have someone, one of my mentees actually based in Austin, Texas, who's actually handling guest comms and et cetera. And we have a team of handymen and maintenance and cleaners. So for those who are not familiar with how where San Antonio versus Austin is, it's about an hour to an hour and a half away from each other. So it is some amount of distance, but we're basically going to manage that one relatively remotely, but we do have a lot of smart technology that we are going to set up, such as cameras, such as monitors, noise monitors, et cetera, that we're going to basically monitor remotely. And we do have a team of on-site maintenance people that we're going to loop in whenever there's a maintenance issue and cleaning issue. In terms of hotels, that's a different story. It kind of depends on the local hotel permit and what it requires. A lot of hotel permits require someone to be on site during business hours. Some permits require someone to be on site during off hours as well, as long as there are guests staying on the property. And so for something that's 100 units, 40 to 100 units, it just makes sense that even though we're automating as much as possible for our hotel operations, and we're taking a lot of our automated tools from STR into hotel scale, as we scale, we're still going to hire some staff. And I think that we're going to basically hire half as many staff compared to our traditional hotel model. But I think that it's actually easier when you're getting something that's 50 units to 100 units to manage that versus to manage 10 units, just because now you can afford, based on the gross rental revenue, you can afford one full-time person on site and pay them a really good salary.
So in terms of the conversion process, because you have month to month, are those long-term tenants that you're saying, the month to month with the midterm rentals or short-term rentals? You have a combination?
For the San Antonio multifamily, yes, we're going to have some monthly rentals as well as short-term rentals. I sold one of my San Antonio properties. It was a larger house with amazing patio space. And it had a tiny little casita in the back. And how San Antonio permitting is such that there's like a density requirement for the permitting process. And long story short, the SCR permit is technically only good for either the main house or the small house. So I basically SDR the main house, and then I rented out the casita, the tiny little house, as a monthly rental. And to my surprise, I decorated super, super cute. I was able to get $2,300 a month. and it was almost 100% booked. And the market rent for that area is probably around 1,000 at the time. And so that was a big eye opener for me. And so we're expecting to gross quite a bit for my monthly rentals in that market as well.
Yeah, so I'm just thinking because we own some multifamily deals, and we've thought about converting when tenants move out, converting those units into short-term rentals. But the issue is that we have property management in place and they're getting, 6% of all the income on all the buildings. So then how do you have a manager? How are you working the fees for your management company if you have short-term rentals and long-term rentals in there? Because it's a completely different skill set to manage those properties, and going from like 6%, which like to about 20%, I think is normal for short-term rentals is what I've grasped from these meetings. That's a pretty big difference. So how are you working with your management team to like kind of convert those units?
We don't really have any long-term rental traditional management companies. So the management company that I'm talking about is actually one of my STR mentees. And they have a lot of prior experience working at a different STR management company before I'm helping them build their own STR management company. So really it is in essence an STR focused company. And we're not doing like a travel nurse, like furnishfinder.com or something like that. We're basically using Airbnb and VRBO for our monthly rentals. So we're not collecting applications very similar to long-term rental and property management. We're basically just collecting information from Airbnb and VRBO. We might also collect additional information on top of that, but all our payment collection and everything else is done through Airbnb and VRBO. I just personally prefer that way just because it blends so much more seamlessly into our existing business model and how we collect payments for our STRs. And also, I personally have found that I'm able to collect a lot more on Airbnb than traditional midterm rental sites as well. And so I've played around with midterm rentals versus short-term rentals a lot. And every single time my bookings on Airbnb is just astronomical compared to traditional midterm rental sites. Just as an example, we just collected $11,000 a month for a Round Rock property, which is basically in the Austin metro area. It was an insurance claim person staying there. It's a tech person with his family. And but long story short, that was via Airbnb. And I don't think we would have gotten even $8,000 if we use a midterm rental site.
Diya, you said a lot of us are purchasing like homes, single family homes, like in the $700,000-800,000 range. But give us an insight of what you expect to generate from that that hotel that you're buying.
All right, let me see if I can actually.
Because I know that was my aha moment. I said, "What the hell am I doing here?"
Yeah. Okay. So let me share with you. Actually, let me see, how do I do this? Because apparently, okay, there we go. All right, so I'm gonna share with you.
And Diya, are you syndicating out these? Do you have investors in your deals, or they're just all your Airbnb team and you guys are operating them in-house?
We are not syndicating. They're such small deals that they're basically little joint ventures. And a lot of people who are investing with us, they are people wanting to learn and help on the deal as well. So it's a little different. Once we get a little bit more properties and more hotels in the 10 to 45, 10 to 50 range, we're going to start syndicating. So I wanted to show you guys. Let me see if I can pull this up. Spreadsheets. Okay. All right. So I will share my screen again. And to those of you guys who do not like numbers, I apologize in advance because there's a lot of numbers. So that's going to jump out at you. So too much numbers. So let me just explain really quickly. So purchase price 385, which is super low. This is the property we're supposed to close on this week. We already reviewed the HUD and everything. So fingers crossed we get it closed by Tuesday, Wednesday timeframe. But anyway, it's really, really rough. I want to show you guys what it looks like right now. You can see that it looks really rough. There's termite issues. It was hit by the hurricane. There's a random guy that's staying there with a lot of plants grow in the front that he's part of the reason why we're delayed in closing, because I was like, I do not want to inherit this guy. So he needs to get out before we take this over. And we said it very kindly, of course. But long story short, that's why we're delayed in closing. But anyway, so really rough, 385 acquisition price. Improvements, it's a gut rehab at 584K. This is a very, very conservative rehab estimate. I think we're going to spend closer to 400K, but we just wanted to make sure that in case there's any unforeseen circumstances that we are going to be covered. And so we actually built in 20% management into this, 10% local, 10% remote, and then 10% repairs and reserves, as well as a 7% tax rate. But anyway, so this is actually going to be converted into short-term rentals because the hotels are actually really large. The hotel rooms are really large in size. And if you look on Rockport, Texas, you'll actually see that there's not a lot of quality listings. And I'll go into that later. But anyway, based on Airbnb projections, we're able to get about 31K per unit. And then we're able to get for the studios, and then for the 2-bedroom, 1-bath, we're able to get about $34,000 a month. And by the way, we just did our walkthrough for this property, and it looks like some of this, what we thought were studios, are actually going to be more like 1-bedrooms or 2-bedrooms. So this is really, really conservative, but we're expected to gross about 400K conservatively on a 385 purchase. So that's kind of mind blowing, right? And what's even cooler is that our rehab, so this is based on, let's see. I actually analyzed this on a 12% cap rate, which is really conservative. Those of you guys who understand commercial real estate, that's very conservative. Normally, independent hotels are actually trading at about 8 to 9 cap. So even if I did a 10 cap, like 12 cap, it's the appraised value after renovation, it's about $1.6 million. If I change this to a 10 cap, it's actually $2 million valuation. So very, very conservative estimates once again, and we're basically doing a giant BRRRR deal with a hotel.
What is the difference between analyzing a regular multifamily and a hotel or a motel? Is there any difference? I know the cap rates are a little bit different there, but are you factoring in anything different or versus a multifamily?
So I would say that I had to build my own calculator that you're seeing on the screen here, because when I was using multifamily syndicators calculators, a lot of them are geared towards this is how much the monthly rent is going to be. And there's no such thing as a monthly rent in Airbnb world, right? So we're based on average annual gross revenue. So I had to build out my own calculator. And also I have to put hotel tax rate. That's one of the big things, right, that you have to understand. I also have much higher insurance on the property. And I also have 20% management instead of just, let's say, 6% or 10% management. Oh, by the way, it's not even 385K acquisition because that was our offer price. But since I self-represented, I was a former attorney, so I negotiated the contract, I structured the contract. So I negotiated that we're getting 3% credit at closing instead of having a buyer's agent. So we're getting $11,000 credited towards how much we need to close this property.
So this is, you're saying 65,000 to furnish 13 units.
Yes.
Yeah.
Yeah.
And then, so yeah, I think the biggest difference is the management fees. And then where do you have your like cleaning fees wrapped into? Where are those?
So basically when you're looking at AirDNA, it's it doesn't track so it doesn't track how much booking revenue you're getting from the cleaning fees. For those of you guys who might already have at least one Airbnb, you know what I'm talking about. There's your average nightly rate, and then there's a cleaning fee. And so what AirDNA does is that it tracks basically just your average nightly rate and then your occupancy. It does not track how much you're charging on the cleaning costs because it's assuming that that's not revenue. And so it ignores it. But in reality, almost every single Airbnb host I know actually charges, let's say, $150 to the guests, and their costs to their cleaners is like $100. And so they actually make a little bit of revenue on the cleaning fee as well. But anyway, long story short, because not seen as the cleaning fees are not seen on the income side of the analysis, is also not seen on the expenses side of this particular analysis. Now, if you want to be super, super conservative when you're doing hotels, what I end up doing is that I pull a CoStar report, which is basically for local hotels as well. And I compare what my average nightly rate is and what my expected revenue is as well on those. And then I also look at what the cleaning costs are for this previous hotel owner, and I scale it up. So there's a lot of different ways depending on the size of the hotel, but because this one's so tiny and we're running at 100% like a STR, we're doing very, very STR heavy assumptions on this. If you look at our 48 key hotel where we have a full-time staff, and it's run a little bit more like a traditional hotel, we're using a booking software that is specifically for hotels rather than using an STR specific booking software, then the assumptions are a lot more geared towards the hotel side of things, if that makes sense. It's very deal specific.
Yeah. Can we look back at the expenses real quick? I just want to see like all that you're factoring into this. So. Okay.
So we're assuming a lot of things. So we are looking at how much this will be when we refinance this. And we're once again really conservative in that we're looking at it, as you saw, we're looking at it at a 12% cap because we're assuming, let's say, that for whatever reason, the cap rates will go up because of the market conditions. We were also assuming that potentially that the interest rates will go up because they are trending upwards. And so we are analyzing this at a 7% interest, even though we think that right now, if we were to stabilize this, we'll probably get a 5% interest, 4 or 5% interest. So we're ultra conservative in our financial assumptions. We're also assuming about 65 to 70% LTV on our cash out refinances as well.
Is that your goal? Like eventually, like you think after how long do you think the renovations will take you? And then you'll just do a cash out refinance in like what, a couple of years or something like that, or a year and a half?
So yeah, we're going to do a cash out refinance and then pull our initial investment and then some money. And we're looking at about the contractor is quoting us 3 months. We're at least doubling that because that seems crazy to renovate that many rooms in that small amount of time. So we're doubling that. Our financial assumptions is actually quadrupling that and assuming that not all the rooms are going to be online for at least a year.
And then the only thing I don't see is like landscaping type stuff. Do you have that rolled into repairs and reserves?
Yeah, we have a really large repairs and reserves.
Right.
We have a very large remote management and local management. So that's like already 30% off top. So that's kind of how we're, all the little things that we haven't thought about, it's already thought about in that 30% of gross. revenue.
Jason Kane has a good question. Like, since you're like partnering with people or you have like mentees that are working with you, how are you delegating like different roles with your team, like guest communication and all of that?
So in terms of this particular deal, it's just me and Mike on this deal. But in terms of our the people that are also going to invest with us, they're basically more like we will ask them to do certain things, or we'll inform them what's going on, and etc. And if they want to come down for our SDR setup or whatever to learn hands-on experience what we're doing, they're more than welcome to. In terms of delegation, I tend to look at what the person's background is. So Mike has a background of 20 years in tech. So because of his tech background, for our hotels, he is the person that's interfacing with the booking engine management companies. So we're using Cloudbeds for our 48 key hotel. And I think he's attended at least 20 different demos to walk through the Cloudbeds setup process for all 48 rooms, so that it's listed on booking.com, it's listed on Expedia, it's listed on hotel.com. All the prices are supposed to be synced to each other. All the calendars are supposed to be synced into each other. The smart locks are supposed to be synced with the booking calendar, so that when someone in any of the 48 rooms books, then they get an automatic key code. It gets a lot complicated very, very fast. And so his technical expertise is really, really good for that. I would say that I normally take the role of negotiating the contract because of my background in law, as well as the design piece. And then in terms of construction management, that's normally the part that I do prefer someone else to do, just because I am a girly girl, does not always this usually does not sit well with a lot of traditional contractors, for lack of a better term. And so I found that it's not in my best interest or in the hotel's best interest for me to be the person getting bids from contractors. But Mike, or someone like Mike, will be actually command a lot more respect from contractors and probably get us better deals with them as well. And he's actually a lot more extroverted than I am too. He loves talking to people. He loves getting to know everyone in town. He's already excited to have everyone in town come over for barbecue or poker or something like that in our small Ozarks town. So he loves getting to know everyone, from the building inspector, hotel licensed person, to the former owner, basically everyone we need to please in the town.
Yeah, and Cloudbeds is like your channel manager for your hotels, right? And he did a presentation for us, and I can tell you, it seems like he knows that thing inside out. So I think he's the perfect guy for that. So
yeah. And we do have on our multifamily deal, it's not on this slide deck, but we have someone who is very high up in the tech world. He has an MBA degree from UC Berkeley, and he also in real estate and tech. So we end up having a lot of people that I collaborate with who's heavily based in the tech world, and are also formerly at a pretty interesting W-2 job as well that kind of fits into what we're doing. So the guy with the MBA major, he's normally the guy running our financial analyses when we have him on a deal. He's very, very conservative. Mike, with his tech background, he's going to be normally our tech person on these deals. Me with my legal background is normally, I'm usually the person negotiating the contract or structuring the deal, creative financing, as well as on the back end in terms of the designs and etc. That's what I shine in.
Yeah, that's so awesome that you guys are kind of playing up your skills on that. So even in like joint and general partner structureships for like multifamily deals and syndications, if they take like 80% of the syndication, 20% of it goes to the general partner team. Like a lot of multifamily syndicators have pretty much blanket rules of what percentage you get in the general partnership based on what you're bringing to the deal. If you're bringing the earnest money capital, the earnest money for the loan, you get 10%. If you're signing on KP as the loan, you get 10%. Capital raising for syndication deals usually always gets 30%. So then you can divide up how much capital is needed to raise for that deal into 30% of that 20% of the 100%. And then you get down like exactly how much capital you bring to the deal, what percentage you get in the general partnership based on that. So, and then asset management is usually like another 30%. If you can do the financing, you get another piece. So there's a lot of different ways that you can break down the structure of these deals, but it sounds like you guys just went in 50-50 for it. Is that right?
Yeah, we have for this one, in terms of the people who are basically running most of the day-to-day operations, just us two. We do have people who are once again, interested in learning or interested in being a joint venture partner or something like that, and to that effect, for smaller deals like this. But it's not a traditional syndication project where everyone's 100% passive. We do tend to have a lot of people that are interested in learning about STRs or learning about hotel investing that want to actually be a little more hands-on for these smaller deals. For the bigger deals, we tend to have, we're going to syndicate and have 100% passive roles.
Yeah. I was talking like the 20% of the general partner role. That's the active. That's kind of how that's broken down. So you guys, even with this one, are you bringing in like your students who want to learn, who are helping you with the deal? Are they on the legal docs? Are they on the company agreement or no?
So we've had it both ways, but for this one, they will be on the LC.
Okay. So you're giving them equity in it. Okay. Super cool. I love that. I love coaching and bringing students up in your business. That's super smart. Are we at time? How can people get a hold of you if they want to learn more about what you're working on, what you're doing? They want to follow you in your story and all the cool stuff you're doing.
Let's see. I think I shared, let me just reshare that screen again where it was all my contact information. Let's see. So the easiest way is to reach me on Facebook or Instagram. Let's see. Let me share the screen again. Easiest way, Facebook, Instagram. My Facebook is semi-private. So if you follow me, you're able to get all the real estate content without being Facebook friends. And then Instagram is 100% public. I post a lot of my STR content as well in the Airbnb professional host group. And then also just recently I got really tired of calling a bunch of different lenders who don't understand what STR income really means. And so I finally found a lender who is an STR investor himself. Ta-da! And so we don't have to explain to him what Airbnb income really means anymore. And so I partnered with him already on both DSCR, which is asset-based lending, as well as conventional loans. And so if you're interested in learning about that too, you can email me about that. And then if you want to schedule one-on-one, you can use the Calendly link that I have on the screen right here.
And you have some courses, right? I mean, some of us are rookies still, or where we're still learning about like maybe wanting to get into short-term rentals, right?
Yes, I do. So that last link is for STR. Let me just post this really quickly in the chat as well, so you guys can get it. So let me type this. So there's a short-term rental seminar 2022 edition. There's and then we have an upcoming San Francisco meetup hosted by STR Nation and Bay Area Investor Club. So for those of you guys who are in the California or Northern California area and you want to see the in-person event, you can attend that too.
Yeah, I think Stephanie's on this call. She's been promoting that meetup too. I'm gonna try my best to get up there. I have to call in sick. Oh wait, I shouldn't have said that, but our
this is recorded. We'll cut that out. Awesome. Thank you so much for coming on. Learned so much. You're such a rock star. As you were telling of even the story of not being like compatible with construction, guys, it just makes me kind of roll my eyes in the industry. There's so many hurdles that women have to break through in this space. And I respect it. And I love seeing women out here doing amazing things, like entrepreneurs, so smart, business savvy. You're out here really doing it. So it's really awesome to watch, just from a female and just as a fellow real estate investor for sure. Alex, do you have any parting words?
No, like I said, it's I love Diya. I'm a huge Diya fan, and how she's scaled up so fast and what she's doing. It's extremely impressive. That's why I really wanted to get you on here. But no, next week our meetup will talk about StayFi. StayFi will be just a way to help get you your direct bookings. That'll be kind of interesting. So hopefully I'll see you guys there Monday, 6 p.m. Pacific Standard Time.
Awesome, you guys. Thank you for another Monday night. Everyone have a great night and a great week.
Bye, everyone.
Bye, guys. Thank you.